Today is, got it. Today, of course, is some special day. We are going to stay awake because it's Investment Advisor Day. But first, we're going to have the pledge to our country flag. Bill Rowan, you're on.
Ready. Put your hand over your heart. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, with liberty and justice for all. Did that go through?
Yes, Tom, you're muted.
I don't think I
You're
was
still muted.
I don't think I was muted.
No, Bill, you were fine. Tom, you're muted.
I'm sorry. Okay. Thought of the day is from Mark Rogo. Mark, you're up.
Hi, everybody.
Now you're muted, Mark.
Mark, you're muted.
Well, I unmuted myself, but here I am again. I want to say that I reflected on this and I went to the Rotary International website that has a wealth of information on thoughts for the day. And I came back to the core belief as I read through all of them, my core belief that we all should be Rotarians. Because if you look at the common thread through what is said on these thoughts for the day that other clubs have submitted, they all have the common thread that a positive frame of mind. Even in the divisiveness that we have in the world today, with all the stuff going on from the Ukraine to everywhere else, you have to think positive. We have to believe that we're going to get past the pandemic. We have to believe that the world's going to come together and defeat future ones. We have to believe that our political leadership will someday get back to governing the country. We have to believe that our lives will become normal again. And with all of that, we also have to believe and recognize how lucky every one of us is to be where we are today, to be in this country, to live the lives that we lead, and that we should all be Rotarians every day of the week, not just Thursday. Every day we should be thinking of a way to make this a better world. And with that, I hope that all of you stay positive and test negative.
Thank you, Mark. I think that's wonderful, but you're having the world come together is a far reach. There's no question about it in this day and age. But those are good thoughts anyway. Let's see. I'm going to the next slide. I'm page down. Why doesn't that work? Going to have the song of the day, but I don't know why. There we go. Ed Gold, Songmeister.
Okay, since we're on the verge of going to war with Russia, and the Army will play an important role, and I thought we'd sing the U.S. Army official song, "The Army Goes Rolling Along." And here it is. Over hill, over dale, as we hit the dusty trail, as the caissons go rolling along. In and out, hear them shout, canter marching right about, as the caissons go rolling along. Then it's hi, hi, he, in the field artillery. Shout out your number loud and strong, 2, 3, for wherever you go, you will always know that the caissons go rolling along. Good luck, everybody.
Thank you for the rendition.
Ed, that is the artillery song.
Well,
Thanks for the rendition, Ed, but I certainly hope there's no war. That's
we all hope that.
Next, how about some busy Rotarians? I don't know of any, but how about UCLA Rotaract? Is Rotaract on? I don't see her, Marcia, so maybe he or she will join us a little
Yeah.
later for the announcement.
All right, thank you.
Guest Rotarians, Mark, you have someone in the background.
I do. For the third time, I'm introducing Nancy Cohen, who is an old friend, a client, a wonderful human being, and interested in Rotary, and she's joining us, and she's actually looking forward to the first in-person meetings that we're going to have.
Great. Welcome, Nancy.
Thank you.
So get that application in hand, Mark.
She wants to see in-person meetings.
All right. Any other guests? I saw Rob Park on there. Who's Rob Park?
Tom, Rob Park is a friend of mine who is in the finance business, and I invited him to join us today.
Okay, well, he was on earlier. I don't know whether he's still on.
Yeah. This is Rob. As you can see by my title, I'm at TCW, dealing with the this financial not meltdown, but the correction that's going on front and center, and run a $9 billion or so large cap growth product over at TCW. So just curious. Mark invited me, so thanks for the invite.
Thank you, Rob. That's great. TCW, Trust Company of the West, isn't it?
Yep, Trust Company of the West.
Okay, welcome.
Thank you.
Now we're going to have some announcements for the day. The first one is going to be March 3rd we're going to resume in-person meetings. The 2 in March are the 3rd and the 17th. It's going to be generally twice a month, first and third week, otherwise Zoom. Now, Terry and I have, the buffet cost is going to be $51. That includes everything. March 17th is an Irish theme with some entertainment. So plan on inviting your spouse. We're going to go to a bigger room and we'd like everybody to attend. And as many of you can, bring your spouse with you. It's going to be kind of a fun meeting. Terry and I negotiated, and with that negotiations, we need to give the Luskin Center an estimate of the attending people on Monday prior to the meeting. Now, I'll give out the instructions, but we need to give them a number, and then we're going to have to hold to that number. So what this has done is require a change in our billing procedure. As you know, Mark, Terry rather, always had the billing for the number of luncheons for the month. However, since we're meeting only twice a month, the regular meeting lunch, there's going to be a list for the pre-billing. Now, the pre-billing is really to help you out and help Terry out as well. If you opt in on this, and I'm going to be sending out this list to everyone in the club. This list, if you opt in, then you can still avoid the lunch. If you're on vacation or going to be out of town or something like that, notify me prior to 11 o'clock on Monday morning, and I'll take you off, and you won't have to. You will either get a credit for the lunch or whatever, but you can get out of the paying for the lunch. If you opt out of the lunch, then you know, and you want to attend, then you notify me by Monday that you'll be there. So this list will come out and it'll have instructions, et cetera, like that, but it's going to change. Even for the exempt people, you've got to tell me one way or another. So plan on this list coming out, and if there's any questions, give me a call, and I'll be sending out an email regarding this. Okay, does anybody have a question right now that they want to, I can't see okay, I guess not. We have one of our.
Yeah, I have a question. I have a question, Tom.
Oh, sure.
If you don't plan to make it, and then somehow or other your plans change, do we call you and say, shall we go, or do we just go and show up and see if there's enough food, or what do we do?
Well, there'll be enough food for a few extra people, so that's not a problem. You know, things always happen like that. We'll probably have some people who don't show up, then we have some people that show up. We're just trying to get the best estimate.
Okay.
If we have
All right.
28 and I bill for 28 and only 26 show up, you know, that's okay. But 33 show up, then you got a problem. So we're just trying to get the best deal. And you're already on a no deal on the list, as far as I know, Gordon, because prior emails, you recommended, you opted for a no.
I don't remember, to be honest with
Well,
you.
anyway, you'll see the list when it comes out.
When
Okay.
it comes out, Gordon, when it comes, and everybody, when it comes out, if you're not on the, you just have to think of it forwards and backwards. If you're on the list, you're going to get billed. So you need to tell us if you're not coming. If you're not on the list, you need to try to tell us if you are coming. That's really all there is to it.
That's simple. Okay, one
Got
of the valuable members here at the club is Ruse Bay. And Ruse Bay has been made and gotten some press lately from several papers, including the Epic Times. And what Ruse Bay wants to do is reform the city's charter. As you know, Ruse Bay was came to the United States as a political asylum, and he'd been here for about 20 years, but he had been imprisoned by the Islamic militants back in Iran for a period of time. He's a member and a president of the West Los Angeles Chamber of Commerce. And he owns the Delphi Greek restaurant as well as Marion Rob's. Ruse Bay's came here with nothing and built up his business, and he loves LA, but he points to the increase in crime, homelessness, business regulations, and the cost of housing as reasons to recharge and change the city government. It's almost like a third world country, he says, and it's not the leading part of the world, and the city's not what he's used to. So therefore, with the November elections coming up, these issues were in his mind and in the minds of many Angelenos. So he wants to reform the city council charge. Well, anyway, we're going to try to have Ruse Bay as a guest speaker at some point in the future. And I guess he's not on, but Ron Leister suggested we find him for this publicity, but it's a little early yet, but I'm sure he's deserving of it at some point. Mark Rogo, any update on the March 31st sailing ship? You're on mute, Mark. You're still on mute.
Okay, there we go. I've got some very exciting news. Two things. First of all, check this out, just for the hell of it. For the first time, I did this on AirPlay, and I have it up on my big screen in my living room. That's where we're watching it. That's a lot of fun. I had more fun trying to figure that out. But back to the tall ship. March 31st, our club is going to have use of the tall ship, the 3-mast wooden sailing ship in the San Pedro Harbor, to go out for a 2 or 3 hour trip into the harbor, into the ocean, and sail around, see what these old ships were like. It's over, and you'd be fed lunch and so forth, then come back. This was offered by one of the San Pedro Rotarians, and so there'll be some emails coming out. And I think we're limited to 50 people. And I got to ask Diane and Tom how to work that out. And I think they give us lunch, and I think we start boarding at 11:30 on March 31st. So I think Diane and Tom we're gonna call this a meeting, and but we're all just gonna have a great social event, and I hope to see all of you there.
Thank you, Mark. That's March 31st. It just came up, so look forward to that. Other announcements. I knew Simran from Rotaract is on the screen. So therefore, Simran, can you tell us about what Rotaract is doing?
Yeah, I'd love to. Thank you guys for having me again. So recently we had Friends of the LA River this past weekend, and alongside that, we had a social with the Rotaract Club in Bangalore, India. So very, very awesome to connect with a club in a different country, you know, sort of get to know their events and sort of how they run their club in comparison to how we run our club. And this upcoming weekend, we have Compton Initiative. So we will be traveling to Compton early Saturday morning to just sort of help build and repair different churches, schools, just in the general Compton area. And we're also on Sunday, the same weekend, we're planning on packaging and making sandwiches for homeless populations out in Venice Beach.
Okay, that's good. Appreciate that. And what was the date again for that?
For which event?
The one in, I forget the last one.
Oh, the Venice Beach one. So
Yeah.
that will be Sunday, January 30th.
30, okay. If anybody's interested to contact you or maybe Marcia.
Yeah, of course. If anybody would like to be included in the email list, we can definitely send out announcements.
Okay. Thank you, Simran.
Yeah, of course. Thank you for having me.
Any other announcements?
Yes, Tom, I have one.
Oh, okay, Diane?
And Simran, thank you. Just a quick question. I read that it was from 9 to 12 on Sunday on Venice Beach. Is that where you're actually going to make the sandwiches?
So the original plan was for our Rotaract Club to meet at a board member's house. So in this instance, it would be Kiara, who's our international outreach rep. And so we would be meeting Sunday morning at 9 a.m. at her house to make sandwiches for about an hour. And then we would all drive down to Venice Beach to do handout of these sandwiches for 2 hours.
Okay, thank you. So as you all know, Tom,
Wait, Tom,
Barrett,
I have one quick announcement.
What?
Is that okay?
Bill?
Let Diane
Yeah.
finish, please, first.
Oh, okay.
So as you all know, Tom has been very active in getting us a new place to meet this year at Luskin Center. He is very active on the investment committee and reading the bylaws and recommending some changes. And of course, he's been planning all of our social events, except for maybe the ship. And so I have agreed, or I have spoken to a couple of other members, and we've agreed that Tom should be our Rotarian of the month. Thanks, Tom.
Thank you. Thank you. Appreciate that, Diane. Phil, you had an announcement?
Yeah, it's really fast. If anyone's looking to get a COVID test in Westwood Village on Broxton Avenue, usually on Thursdays, but sometimes on Tuesdays, from about 10 a.m. to about 2 a.m. There's a mobile testing clinic right on the sidewalk, right before you get to the parking structure. It's not always there. You can always call me. I can tell you if it's there or not. But if you're looking to get a COVID test, it's within 24 hours. I did some research, and it's a legit company. It's free, and you just have to have your cell phone with you. So if you do need to get tested, there is that option. It's not every day, but it's once or twice a week, and you can always call me, and I can tell you if they're there or not. But they usually set up around 10. They usually leave around 2. So.
Okay, thank you, Phil. I'm going to take a brief feature of the day, and my presentation is going to be real quick here, but these glorious insults from an era before, when the English language got boiled down to 4-letter words. These are classic insults from the past. I've never killed a man, but I have read many obituaries with great pleasure by Clarence Darrow. He has never been known to use a word that might send a reader to the dictionary. William Faulkner about Ernest Hemingway. And if you've read both of these authors, you know what I mean. He has no enemies, but is intensely disliked by his friends. Oscar Wilde. I feel so miserable without you. It's almost like having you here. Stephen Bishop. I've just learned about his illness. Let's hope it's nothing trivial. Irving Cobb. He loves nature in spite of what it did to him. Forrest Tucker. He has Van Gogh's ear for music. Billy Wilder. I've had a perfectly wonderful evening, but I'm afraid this wasn't it. Groucho Marx. I can hear Groucho saying that. And the best for last, I'm enclosing 2 tickets to the first night of my new play. Bring a friend if you have one. This is George Bernard Shaw talking to or speaking about Winston Churchill. And the response from Churchill: cannot possibly attend the first night, will attend the second, if there is one. Churchill response. So anyway, that's just a quick statement. Now it's time for our financial forum. After a bull market in 21, we're going to see whether it become a bear market in 22. And with that, we have our moderator, Steve Scherer, with panelists Crane, McCready, Heikkila, and O'Keefe on the spot. I'm going to stop sharing here. So tell you, if Steve needs to share the screen, so be it.
He's
Okay.
a co-host. He can share.
Okay, Steve, you're up.
This is perfect the way it is. I like the panorama, and it gives a sense of seeing everybody, and that's perfect. So thank you. And Nancy, I see you made it in from your important meeting, and so that's good news.
Yes.
So I think we're, and I also see Brian Whitney in the audience, and Brian declined to participate this year, but I'm sure he will in the future. Right, Brian? Okay. So the first Westwood Village Rotary Club Investment Advisors Day was on December 14th of 1989. That's over 32 years ago. And the Dow was at 2,700 and prime rate was at 10.5%. Today, the Dow is above 34,000 and prime is at 3.25%. Since then, fortunes have been made and lost in the stock and bond markets, notwithstanding this grinding upward trajectory in the valuation of the markets. Let's look at the past year. In 2021, the markets rose on low interest rates, massive government stimulus, and huge rebound in earnings. Investors also had to contend with one big factor that they mostly ignored for the past decade, and that was inflation. US inflation reached nearly a 4-decade high, raising questions about how many price increases consumers and businesses can absorb. And the emergence of the Omicron variant of COVID has whipsawed the US markets since Thanksgiving of last year. In summary, the market moves in 2021 were remarkable. And these market moves were especially remarkable when you view them over a 3-year period of time. And as we all recall, in 2019 was probably our last non-pandemic year. And so that's an important, and I'm going to cite some statistics for 2019. And then of course, 2020 was when COVID hit and the economy shut down and massive federal stimulus and extraordinary interaction by the Federal Reserve, and then of course 2021, our most recent year, also was a year where we started to recover, and then the Delta variant came along and the Omicron variant came around, and so again there was a lot of federal stimulus and easy monetary policy by the Federal Reserve in 2021. And so those 3 years, I think it's important to think about what happened over those 3 years with respect to the various averages. So in 2019, the Dow was up 27.8%. It was in 2020, it was up 7.2%. And in 2021, it was up 18.7%. So far this year, the Dow is down roughly 6%. The broader S&P 500 index in 2019 was up 28.9%. It was up 16.3% in 2021. And then in 2021, it was up 26.9%. So far this year, the S&P 500 is down about 9%. The tech-dominated NASDAQ for 2019 was up about 35.2%. In 2020, it was up 43.6%. And in 2021, it was up 21.4%. So far this year, it's down about 13%. Just remarkable to see what has happened, the trajectory of the value of equities over that period of time. And so a remarkable amount of appreciation, but you can see there appears to be maybe an inflection point. We don't know, 1 month, who knows what that means, but a move downward in January, and something that's caught all of our attention. With respect to the one-year Treasury, in 2019, the yield on the one-year Treasury decreased by 100 basis points. In 2020, it decreased by an additional 152 basis points, or 1.5%. And in 2021, it actually increased by 29 basis points. And so far this year, the one-year Treasury has increased an additional 47 basis points for a yield of 0.86%. The 10-year Treasury in 2019 decreased by 77 basis points. In 2020, it decreased an additional 100 basis points. And in 2021, it then increased by 62 basis points. And so far this year, it has increased an additional 28 basis points to close yesterday at around 1.79%. And so again, it's interesting to note this inflection point where we're seeing increasing rates beginning in 2021 and continuing on at least through the first 4 weeks of January of 2022. Also, it's interesting to look at oil, because oil for many people is a commodity that can show us signs of inflation, because so much of the economy in this country and worldwide is run with oil as part of it. And so in 2019, a barrel of oil, you could get it for $61 a barrel. In 2020, down to $48 a barrel. In 2021, up to $75 a barrel. And yesterday it closed at around $87 a barrel at the end of the first month. So you can see that there's some pressure towards inflation, which we're seeing very clearly. As 2022 begins, investors are heading into the new year with a US economy that may be primed for continued recovery and growth. So the Federal Reserve is moving toward the first rate hike since 2018 to tamp down inflation. In Congress, it appears that there is no clear path for another massive spending bill, and earnings are expected to grow, but more moderately than was the case.
Steve, you're muted.
You went on mute.
Steve, you muted yourself.
How long have I been muted?
Only a minute,
Good.
less than a minute.
I hope so. So the questions for 2022 are as follows. Will the economy grow, maybe at a rapid rate of up to 4% down from the 5.6% in 2021 as the pandemic hopefully recedes. Will the job market stay tight with employment eventually at 3% or below? Will the great resignation moderate, and will a hybrid model dominate in many work environments? Will the Federal Reserve fight inflation by tapering and raising short-term interest rates multiple times? Will mortgage rates remain relatively low in the range of 3.25 to 3.75%? Will supply chain clogs moderate, especially in connection with goods coming from East Asia? Will inflation be transitory and fall below 3%, 7% now by some measures? Will it fall below 3% by the end of the year? Will the geopolitical risks associated with China and Russia negatively impact growth aspects and prospects in the US? Will Republicans flip control of the House in the midterm elections from a 9-seat deficit to a 10-seat lead? Will the Republicans gain a 1 to 3-seat advantage during the midterm elections in the evenly divided Senate? And the question that's on everyone's mind, will the pandemic end and will life return to a more normal state of affairs? Wow, those are a lot of questions, a lot of cross currents, and a lot of issues to think about out there. Let's take a look at the financial data and predictions for last year. As I mentioned earlier, the Dow for 2021 closed at 36,338 for an 18.7% increase. We polled the Westwood Village Rotary Club, and they believed that it would go up 12.5%, and that was pretty good. And our investment advisors predicted that it would go up only 8%. So the club beat the advisors on that one by a good 4 percentage points. The S&P 500 appreciated by 26.9%. The club thought it would go up 12.5%, and the investment advisors thought it would go up 12%. So pretty much a standoff between the club and the advisors. The NASDAQ went up 21.4% last year. The club thought it would go up 12.5%. The investment advisors leapfrogged that and thought it would go up 17%, a little better than the club performance there. With respect to the one-year Treasury, it increased by 29 basis points last year. The club felt that short-term interest rates would go up by 50 basis points last year. The investment advisors said 10 basis points. And then with respect to the 10-year Treasury, it went up by 62 basis points last year. The club thought 75 basis points, and the investment advisors hit it right on the nose with a 60 basis point increase to 1.51%. So we all got the trajectory right, both the investment advisors and the club. And so that sense of what's going on in the minds of investment advisors and the club had a consensus there, which was really interesting. Also, as you may remember, in January of 2021, our investment advisors carefully selected a portfolio of Biden stocks, including United Health, Logitech, the Clean Energy Fuels Corp, Johnson & Johnson, and Qualcomm. If you had invested $10,000 in each of the positions recommended last year, your portfolio value at the end of the year would have been only $50,400, or a small gain of $400. Of course, that's before dividend income. Our investment advisors, we claim victory together, and we together recognize that if you have one or two bad picks in a group, it's going to take them all down. So that's what happened. So we didn't really earn our fees last year, and so sorry about that. What will happen in 2022? Again, we have assembled a distinguished panel of experts from the ranks of the Westwood Village Rotary Club. But before inviting the advisors to prognosticate, it's time to poll the Westwood Village Rotary Club. And so, and this is where I need your help, Tom Barron, if you can help me see the consensus on this. How many think the Dow will be higher than the 36,338 closing for 12/31, recognizing that now it's at 34,100 and something? How many think it'll be higher at the end of this year?
Raise your hand if you think it's higher. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14.
So I think
Okay, I think I've got it. I think I've got it.
Yeah, I think based on the number of hires that the consensus of the club is that the markets will go up. The Dow will go up next year.
But it's pretty evenly divided, Steve. We have, I think, almost 30 people there, and 14 think it's up. Let me count the negatives.
How many would think it's going to go down?
Two. O'Keefe, your hand are up or down?
So we're just looking for the consensus here. I still think we've got a consensus of upward. You agree, Tom?
I agree.
Okay.
Yeah, there's
So how many people think it will go up 5%? Keep your hand up if you think it will go up 10%.
10.
Keep your hand up if you think it will go up 15%. This is the Dow.
Your consensus is 10%.
10%. Got it. So now let's go to the S&P 500. And how many people think the S&P 500 will be lower than its close, which was 4,766, and now it's trading around 4,349, lower. Okay, I think we have the same consensus for higher, Tom. Do you agree?
I agree.
Okay. How many believe the S&P 500 will be higher by 5%? Higher by 10%. Higher by 15%.
Whoa, 10%.
10% again, we're 10%ers. And now for the NASDAQ heavy, the tech heavy NASDAQ, how many people feel the NASDAQ will be lower than its ending price of 15,645, recognizing that now it's trading around 13,500? Lower.
Not many of us.
Okay, so upward bias again, 5%, up 10%, up 15%,
10%.
10%. So 10% across the, okay, now let's talk about interest rates then. The 1-year Treasury yield, it closed the year at 0.39%. Yesterday, it closed at 0.86%. It jumped up. How many people believe that the 1-year Treasury, the rate of interest will be lower by the end of this year than where it closed the year? How many believe it will be higher? Okay, higher has the consensus. So higher by 25 basis points. Higher by 50 basis points. Higher by 75 basis points. More than 75 basis points. Okay, so what is it 75 basis points, Tom?
I think it was higher by 50 basis points.
50, okay. And now let's try the 10-year Treasury, recognizing that it closed at 1.51% and now is trading around 1.79%. How many believe that the 10-year Treasury rate will be lower at the end of the year than it is now?
Nobody.
So higher by 25 basis points. Higher by 50 basis points. Higher by 75 basis points.
50 basis points.
50 basis points it is, okay. So the direction from the club is for the equity markets to move up by about 10%. And the 1-year and the 10-year Treasury to both go up by about a half a percent. So now, the moment you've been waiting for, I'd like to introduce our panel. And they will opine on the closing 12/31/22 Dow, NASDAQ, S&P 500, the yield on the 1-year Treasury and the 10-year Treasury. And in addition, this year we've selected a stock pick categorized as a post-pandemic stock, whatever that is exactly. We'll let each person define that. And so first of all, our panel. This year we have Jim Crane again presenting, and he is a extraordinary life insurance agent and a specialist in many variable equity products at New York Life. We have Dwight Heikkila, who is a certified financial planner and an extraordinary manager of money for his clients and for himself. We have Nancy McCready, who's with Wells Fargo Advisors, and she's a financial advisor and a CFP. We have John O'Keefe, who will be presenting, and John O'Keefe is an extraordinary bond guy, and we listened to him a few weeks ago. And in addition, John has been an investment advisor to some of the largest consolidations of capital on the West Coast. And so he has great experience in these matters. And then I will be opining as well. And so enough said. Jim Crane, are you ready to proceed?
Yes, yes.
Let her rip, Jim.
Okay. It's interesting. New York Life did a study over the last 25 years of what happened in the bond area, and they were recommending that people de-emphasize the core bond holdings and because in the rising interest rate environment, look at things like convertibles, short duration high yields, and municipal high yield bonds as opposed to the core bonds. As you know, when interest rates go up, bond prices go down. So that's an interesting study that shows that those are some alternatives in a year when we expect the interest rates to go up, as the club just verified. So my predictions for the 1-year U.S. Treasury is 1.4% at the end of the year. The 10-year Treasury is 2.3% at the end of the year, which is almost an 80 basis point increase on the 10-year Treasury. As far as equities go, again, New York Life, and my position is that this is a good year to invest in equities, even though the interest rates are going up and in bond or in well, in some of the bonds anyway, and especially the small cap stocks compared to last year, where we had a large increase in the S&P 500. So my predictions are for the Dow 39,000, for the S&P 500 5,050, and for the NASDAQ 17,400, which is I think pretty much in line with what the club was suggesting too, either very, very high single digits or double digit type returns. And then as far as the post-pandemic stock, you know, I looked at the sort of the high flying small cap stocks and was kind of discouraged with where I saw they had come. I expect all kinds of volatility this year compared to last year. So I'm actually sticking with my recommendation I made last year, which is United Health Group. It's a large company, obviously. You know, the U.S. spends $4 trillion a year on healthcare, and of course, United Health is the industry's leader with an annual revenue of $300 billion. It leads in managed care and provides the most popular Medicare Advantage plan. And of course, you know, in the United States, we got 10,000 Americans that are turning 65 each day and are transitioning into, you know, either Medicare Advantage or Medicare. And of course, the earnings are, at least some feel that they're going to go up 15% annually in the next few years. So I'm sticking with United Healthcare. So that's my presentation, Steve.
Thank you for that thoughtful presentation, Jim Crane. Thank you. Nancy McCready, are you ready to go?
I am ready. Thank you. And I am pretty optimistic about this year in terms of recovering from where we are, not with the same growth rates that we had last year, but still, I think that most of the circumstances that we're dealing with will be resolved in a positive way, or at least we'll see progress on them. In terms of the Dow-Jones, I'm not as optimistic as Jim. I do believe that we're going to recover beyond where we are right now. The Dow closed today at 34,161. And I see the Dow improving 8% beyond where we are right now, which would put it at about 36,900. I estimate that the S&P 500 will finish the year at around 5,000, possibly 5,100, but I'll say 5,000. Similarly with the NASDAQ, I'm looking at improvement from where we are right now, not from the end of 2021, and I'm predicting that the NASDAQ will close at 14,810. I think on the one hand, our technology sector has tremendous innovation, but it's also running into more headwinds than in the past. We're seeing the specter of much more regulation in the US and other parts of the world. And I think that the antitrust issues could be serious. I don't know. I don't know to what degree, but I think that that will put a cap for the time being on the growth rate. For the one-year Treasury, I'm a little more optimistic than the club. I would see it, not optimistic, maybe pessimistic is the word, but I see it going up by 70 basis points this year. And the 10-year Treasury, I would be in line with the club in estimating that it would be up about 50 basis points as well. My stock pick is not only a post-pandemic, and who knows when the post-pandemic period will ever arrive, but certainly a pandemic pick, which is DocuSign. And DocuSign is the leader in the electronic signature and agreement cloud markets. It already has more than 1 million paid customers, and their estimated potential market size is $50 billion. It's projected by leading analysts, including Morningstar, to experience a compound annual growth rate of 26% a year over the next 5 years. So tremendous, tremendous growth potential. I also see just in the course of my work how much clients love it, that they don't have to come in and sign things in person, or we don't have to mail things back and forth, that we're now set up to use e-signatures with a lot of our important account documents, which makes it very easy for me to do business with clients around the country as well as making it convenient for people who are still quarantining or still avoiding meeting people in person. So I think because of the caliber of the company and the value of the services they offer, I see this as being a company that will see permanent growth opportunities and at a much faster rate than they would have pre-pandemic. That's my summary, Steve.
Thanks for those thoughtful comments, Nancy. Thank you very much. I'm glad you made it away from your
Thank
meeting.
you.
Yeah. Dwight Heikkila, are you ready?
Am I unmuted?
Yes.
Okay. I can see time is our enemy here. So is that. Okay. I would say that business entities conditions are extremely good right now, as well as household savings, payments, things like that, unemployment. All of these are very bullish for the market as well as the economy, and certainly the virus will be more under control 11 months from now. If we can get these robot calls to stop, we'll be all right, won't we? So where are we going from here? And inflation and Fed rate hikes will happen, but in the first couple years of that inflation and rate hikes, typically that doesn't hurt the stock market at all. In fact, most people recognize that stocks are a very good place to fight inflation in your own portfolio. You don't want to be getting 0.5% in some bank when the inflation rate is 7% or even 3 or 4% for that matter. The way I see the closings for the S&P 500 end of this year, 5133, that's a gain of 7% for the year, not 7% from this point. That's 18% from this point. Dow 30 at 39,293, that's an 8% gain for the year or 15% from this point. NASDAQ 16,250, which is a total year gain of only 3%, but that's 20% from this point. We got to make up for that minus 14% or 15 we're at right now. And for the rates, I expect a 1.4% one-year Treasury and a 2.4% 10-year Treasury at the end of the year. I don't really care if it's pandemic or unpandemic. I tried to figure out how that would work. I just like NVIDIA. That's been my grandson's favorite stock since we started out 4 years ago. That company has gone up 9 times, 800% increase in the last 5 years. It's got chips for gaming, artificial intelligence, and robot cars. And what's more, that's the trifecta of the future. So I can't think of anything better than that. And it's about a $500 billion company now. And who knows, a couple more years, it might double from here. So that's definitely a possibility. The PE 70, so it's a little pricey for a lot of people, but that's where it's at.
Dwight, what was the name of that company again?
NVIDIA, NVDA is a symbol.
Been a great stock. It's been a great stock for a long time.
Thanks for those thoughtful comments, and your grandson has very good judgment in picking stocks, Dwight.
Sure does.
Sure does. Thank you. John O'Keefe, are you ready?
I'm ready, yes. We don't have much time here, I guess, but I just want to say I'm delighted to have been asked again to be on your panel, Steve, and to and opine. I love his word opine. I always have to look it up in the dictionary, but I like that word. So I'm going to try to opine on several economic metrics. I will say, and I've said this in the past, and this may be the last time I say this, but we're asked to forecast certain metrics. And I would say that forecasting is a particularly difficult art, especially about the future. I won't say that anymore because that's getting too old now. But anyway, I've read recently about a very successful investor who talks about this very point we're talking about. And he says, being lucky is the important thing. That skill of luck is just recognizing, that skill in the market, I mean, is just recognizing when we've gotten lucky. So I hope I get lucky this year. I'm going to make a fast comment about the Fed because I think you covered it very well, Steve. But I think the Fed has got a very difficult problem now because they got this inflation, demand-driven inflation with lots of money around, and that's probably COVID money and stock market money, and shortages from the supply chain. So you got the classic inflation scenario: strong demand and lessening supply, and on top of that, they've got wage increases, which are starting to show up now, and that's really inflation. If you keep an eye on wage increases, that's really going to tell you where inflation is going to go. I mean, just the, let's see, large wage increases this year, and unemployment's down to 3.9% in December from 5.9 in June. So watch out for wage increases. They could be a problem. So here goes my forecast. Stocks, the Dow-Jones, I have up 9% for the year, and that's the beginning of the year till the end of the year. The S&P up 8% for the year, beginning of the year until the end of the year, and the NASDAQ up 6% for the year. There's some great technology companies in the NASDAQ, including NVIDIA, which is a great company, but the NASDAQ is getting hurt by rising interest rates, and the PE multiples probably are going to have to come down in a lot of NASDAQ stocks. Bonds, the 10-year Treasury, 2.3%. That's up about 50 basis points. The 1-year Treasury is about 1.3%. That's roughly about 50 basis points. And a post-pandemic stock, I've got a good one this year, I think. This is probably the ultimate of all lucky choices to pick a stock. I went to school at the University of Chicago. I'm not bragging, but I went to a school with a gentleman named Eugene Fama. Eugene Fama has a Nobel Prize in economics, and he developed what is called the efficient market theory. Now he's broadened that approach a little bit for the less intelligent like me. He calls it the dartboard approach. You put on your wall a newspaper with the Dow-Jones, with the New York Stock Exchange and the NASDAQ stocks on it, and you throw a dart, and wherever it hits, that's the stock you pick. Now that people laugh at that, but that is what the efficient market theory is all about. But anyway, I'm not going to do it that way. That's no fun. I'm going to try to pick a stock, and I hope I do better this year than previous years. My pick is a company called Southern Copper Corporation. It's a leading producer of copper and several other metals. I think with inflation going on here, this is a stock that'll do well in an inflationary kind of environment. Copper prices are going up and copper is somewhat scarce. It's selling at a 16 times PE, which isn't that expensive anymore. It's got a 6.2% yield, which is quite attractive. And it's the middle of its trading range the last 12 months. So it hasn't gone crazy yet. I think there's still time to buy this one. And I bought it myself. Okay, that's my forecast. Thank you.
Thanks for those thoughtful comments from you, John, and especially the education on the efficient market theory. And I'm glad you didn't throw a dart this year. Who knows where it would land?
That's no fun.
That's no fun. I'm going to give you my predictions rapid fire, and then we're going to open for questions. I know we're a little late, and so that will allow anyone to leave that wants to. Oh, Apple earnings are out. I don't know if anyone knows how they did, but I just got a buzz on that. Anyhow, I think the Dow will close at 38,900. S&P 500 at 5150. The NAS at 17,000 even. The 1-year Treasury at a 1.35. The 10-year Treasury at a 2.35. And my stock is Qualcomm, 5G, and wonderful dividend yield, and just an expanding market for them and the things that they do. That concludes the formal part of our investment advisors presentation. And the one thing that all of us want to make sure that everyone in the Westwood Village Rotary Club does is we want to make sure that you always buy low and sell high.
Amen.
and I think we would be available to entertain questions, but I know that we're over time. And so, Tom.
Let's keep it going. For those who want to drop off, can drop off. For those who want to listen, they can listen.
Okay, fine. Mark Rogo, I saw your hand, and so go ahead.
So some of the indexes are, by sectors, I'm curious, not which sector will benefit most from inflation, but which sector do you guys feel will be most hurt by inflation?
That's a great question. And John, would you like to handle that question?
I would say healthcare should be helped by inflation. It's a need that we all have and keeps increasing. And the one that'll be hurt by inflation, now that's a kind of a toughie. I really think technology, I hate to say that because I have a lot of technology myself, but as interest rates go up, the technology PEs are going to have to come down. I would say technology.
Are there any other questions?
Yes, I have one, Steve, if you don't mind. Since I was one of the negative ones, thought the market would go down. We saw in 2021, the White House and Jerome Powell kept insisting that the inflation was transitory. Now it became obvious that the inflation rate is here for the near future. And so therefore, just today, Jerome Powell admitted that the Fed is going to raise the rates in March and in the rest of the year. Raising rates, unlike what Dwight thinks, I think is bad for the stock market. So if we're going to raise the rates quite a bit, I don't understand the investment advisory group saying we're going to have a positive year. The rates are going to go up definitely to fight inflation. Inflation is here. Why do you think we're going to go up?
That's a great question. Dwight, would you like to respond to that one?
Well, the Fed's always in question, and it usually takes the Fed rate hikes to have to go like 4, 5, 6 rate hikes before it really has any effect upon the companies involved. I know everybody's watching for inflation, and we're all panicking. It's been around, I guess, for about 6 months, and a lot of it's due to supply chain. I don't know how much of it is going to happen this next year. I tend to agree with the estimates that inflation will only be about 3% over the next 12 months. In any case, the market itself does well. It gets volatile, and you get a lot of headlines going up and down. Like next month, definitely, I think we're going to see some corrections again. But I think by the end of the year, I think we're going to be in positive condition.
Good response. Who knows who's right? Gordon Fell, I see your hand up.
You're on mute, Gordon.
You're on mute, Gordon.
Thank you. You happen to pick a stock that I've been a long fan of, Qualcomm. I noticed this morning, however, that the stock has taken a dive. Why do you think that is?
I don't know why it's taking a dive. I do know that there was some difficulties in valuing the semiconductor companies, and so there are all kinds of different semiconductor companies that are out there, and so if you get bad news on one of them, sometimes the robo machines will apply that to all the others, and it's my opinion that with Qualcomm, its 5G approach, which in effect they discovered it with their radio systems, and their increasing market share differentiates them from many of the other semiconductor companies, Gordon. So
I agree. I was trying to decide whether to add to the position.
well, they announce earnings next week, and so you're going to get a chance to see whether they beat the projections for sales and earnings, which I think they will. So we'll see. Nobody knows. Good question. Any other questions?
I don't see anybody.
I don't see any others.
Mark has got another question.
Mark's got a question.
My son-in-law left Facebook, and he's the vice president. Rob Park knows him. He's now the vice president of industry relations at Coinbase. And I asked him one time to explain to me what Coinbase was, other than it's the platform to trade cryptocurrencies. And he couldn't explain it to me, really, to my satisfaction. So I'm asking anybody here, what are your thoughts, the U5 geniuses, about the future of cryptocurrencies and companies like Coinbase that are the trading platforms for them?
So that's a great question.
I know.
And Nancy, do you want to take that question? You don't have to if you don't want to, but if you'd like to.
You're on mute, Nancy.
You're mute.
Nancy, you're on mute.
You're on mute, Nancy.
Mute.
Sorry, thank you. I think it's a great question, Mark. And I think that anybody has to answer crypto-related questions at this cryptocurrency-related questions right now with a large, or allowing for a large margin of error, let's put it this way. I think this is a market that's very much in its pioneer era. And what we're going to see a lot more of, as has been announced recently by the US and China, there are going to be government-issued cryptocurrencies, which will have a big impact on the value of existing cryptocurrencies that are not backed by any government. And I think we'll see a proliferation of types of cryptocurrencies out there. So To me, the potential advantage of a Coinbase is that being a marketplace is probably allowing you to spread your risk a lot more than investing in a single cryptocurrency is. Just as there are a lot of people who would rather invest in blockchain than a single cryptocurrency. So I think we're going to see this market evolve tremendously in the next few years. I think it's very interesting that he went from Facebook to Coinbase. I don't know a better way to describe it than as a marketplace. I think that's a mechanism of exchange, which is hugely important. But I think that by itself as an investment looks pretty interesting.
Marcia, thank you, Nancy. Marcia.
Yeah, I was just going to say, I don't know how many of you have been down to in downtown LA at what used to be the Staples Center to see a basketball game or a concert.
What's its name now, Marcia?
Crypto.com Arena. Crypto.
There's a mouthful.
Down there the other day, and yeah, the old Staples Center is now Crypto.com Arena.
The whole movement of crypto and blockchain and the removing of friction from systems is probably one of the most deflationary moves in economies around the world. And so I think that movement is here to stay. And again, that's a reason why I think it's hard to shortchange technology and the remarkable developments there when you think about the impact of inflation on economies over a 4 or 5 year period of time. Technology is moving fast, and Bitcoin is part of that system, the creation of Bitcoin and Ethereum and all of them, and blockchain is too. So does anyone want to add any more to that? Dwight, yes, jump in.
Yes, Steve, just don't forget, what happens in crypto stays in crypto.
Another way to look at it, if you don't understand it, don't invest in it.
Well, that's probably always good advice. I
Amen.
don't know if it is not.
Amen.
I don't understand it at all.
Are there any other questions from anyone? Yes, Chris Gaynor.
Yeah, I've noticed that the software stocks have come down really hard. Any thoughts on that? Have they bottomed? Do you think that they're going to turn around? I've been following them and waiting to pounce, but so far they seem to continue on a downward trend.
Jim Crane, would you like to take that one?
I think I'll pass. I don't.
Okay.
I'm not.
Okay. John, would you like to take that one?
You're muted.
You're on mute, John.
You're still muted, John.
I got, yeah. It's still back to this interest rate increase. When interest rates are low, like they've been the last several years or longer, you can afford to pay a higher PE for, say, a technology stock. Whereas when interest rates start going up, the PEs they're going to have to be discounted at lower PEs, and that's what I'm going to say. That's why I picked technology as kind of not a very good sector this year, whether it be you know, the kind of stocks you're talking about, Chris, or I think technology is going to have a rough year this year, unless and until the Fed can ease up a little bit on interest rates.
I would just add to John's comment there, which was an excellent comment, by the way, that there's a broad range of software stocks as well. And so not all software stocks are created equal. And that's the same with semiconductor stocks. And so there's some software stocks that have strong cash flow to them and sell at a good value. And then there are some that they have little or no earnings and operate on imagination and maybe they'll be worth a lot sometime in the future, but so I think that's really important in technology, is to understand that not, in probably every area, that not all of them are created equal. Some of them have extraordinary cash flows and extraordinary markets, and others may not be blessed with both of those. Any other, would you accept those as friendly comments to your answer, John?
Definitely, definitely. That's the basic. It's all about earnings and the quality of the company to start with. But then you got to look at the PE and relate it to interest rates and the like. But you're exactly right.
Are there any other questions?
Okay, if there are no other questions, Marcia, did you have one?
I would like to say one thing before we close. I would like to thank all of the members of our panel today for the thoughtfulness and the comments that they've made, and one of the reasons we've done investment advisors for the last 32 years is because in Rotary we lift up the professional aspect of what different people do, and this is part of the Rotary mission to focus on the fact that some of us earn our living in this particular area. And so that's why we do Investment Advisors Day. It's part of the Rotary mission. That's all we've got. Thank you all. Tom, back to you.
Thank you, Steve, and the panelists. In lieu of making a contribution to the Westwood Village Library, we're going to allow you to come back next year.
Goody.
In fact, I'm already thinking about a mid-year program.
No.
The
club,
oh, yes.
the club just enjoys
Thank you
being
all.
inflicted with pain. Yes.
Next week,
Thank you.
we'll have another program, and see you then. Bye.
Bye.
Bye, guys. Thanks very much.
See you all later.